We are officially live. Guys, today we're going to talk about risk management. It is not the sexiest topic, but I would say arguably it is the most important topic. Not even arguably, actually, it is the most important topic because of one key point, and I want you guys to really remember this. Write it on your fridge if you have to, but you can lose money twice as fast as you can make it. Okay, that's very important. We're going to talk about why. We're going to talk about how to protect your capital because that's essentially the name of the game here. And we're going to talk about how you can be profitable and consistent over time, right? Because anyone can make a gamble, anyone can make a good amount of money, but can you keep it, right? Can you preserve it and can you do it consistently over time? And especially with the idea of you losing twice as fast as you can make it, that can hurt you. And I just ask guys, if you like the content, please please subscribe, watch till the end to help with that watch time. I really appreciate it. And to the YouTube people that are new, come and join the Discord. We have over 130 people now in the Discord. We have a great community. We're always sharing. We're always chatting. We're sharing our charts. And again, this is where we're hosting our live stream. So make sure you come and check it out. Also, thank you guys. We just hit 200 subs today. Pretty crazy. We started in maybe a month ago or so. So I really appreciate it. All right, guys, let's get started. So this is MEXC, right? This is MEXC. Your exchange might look a little bit different. I don't know what exchange you're using. But again, we're talking about risk management today. Now, as I mentioned, you can lose your money double the speed that you can preserve it, really, or you can make money. So with that, we need to practice good risk management. Now, how do we do that? So first things first, depending on the way that you trade will depend on what kind of risk you're willing to take on, right? Now, I haven't done a scalping video versus like a swinging video yet, which I will get to. I'm assuming at least most of the people in the Discord should know the difference, but with that in mind, that will determine what your risk is and, where you can put your stop losses, etc. So before we start, just a little intro here to the exchange. If you guys don't know, whoever might be seeing it on YouTube, if you don't know, we're talking futures today. Someone in the Discord prior to the stream asked, the difference between spot and futures trading. I mean, most of us are using leverage. It is riskier, but we're going to talk about that, obviously. And spot trading are more for like the investors, I would say, right? Where you're just like on a super higher term time frame, looking to buy low and sell high. But I mean, it could really go anywhere. Like you could have bought, at 17K and you could have sold it now at 30 and then maybe bought some more at 26, or you could, hold it all the way until like 100K or whenever, if that ever even happens, right? So we're not talking about spot trading today. We're talking about leverage because that's where the flavor is. That's where the spice is. For me personally, spot trading is so boring. Super boring, especially when price action has done absolutely nothing over the past month, as we're or not even more than that. 2 months, like prices have done nothing. Anyway, all right, so let's talk about it, okay? So on the top right of your exchange, right? There's two key buttons that I want you to look at. One is this button here, which will either say isolated or cross. We're going to go over that. And then the other one is obviously your amount of leverage, okay? Let's go isolated versus cross first, the difference and what it means, okay? First of all, I always recommend to do isolated. There are instances in which you can do cross. Perhaps we'll get to that, but the difference between isolated and cross is, let's just say you have $100 in your account, okay? And let's just say it's all within USDT. We're going to use USDT for the whole stream just to make things easy. So you have 100 USDT in your account. If you put $50 in your margin, right? $50 of your own capital on the trade at whatever leverage under isolated, then the maximum amount that you can lose is $50, right? This is why I recommend to do this, because some people may not know that they're on a cross setting, and the difference between isolated and cross is literally your entire account. So when you are on cross, even if you put a $50 position on under cross, your liquidation will be different. and your liquidation will account for you or the exchange, excuse me, automatically adding margin to your position until you get liquidated. And it's to avoid liquidation. So let's look at it in a very practical sense real quick. If you're on isolated, which is the one that I recommend, if you enter here, that is an ugly color. I don't ever chart on this, but I wanted to have these buttons for you guys so you could see. Okay, so if you enter like here, and your liquidation is, I don't know, wherever, here, right? Under isolated, if price comes down this much, then you lose $50, right? But under cross, even though, you know, with the $50 position, your liquidation would be here. What happens is once the price gets to your liquidation point, the exchange will continuously add margin to your position to avoid the liquidation. So instead of you getting liquidated here, it will add, let's say, $20, and then your liquidation will go there. If price continues down, it will add another $20 or whatever, and your liquidation will come down, right? Until you're at your new liquidation point where you have no more margin and you will blow your entire account, right? I don't recommend doing this because in reality, I don't even believe in liquidations, and we're going to talk about why, but I never get liquidated ever. And we're going to talk about why that is and how you guys can do that. But anyways, that's a quick intro to isolated and cross. I hope you understood that. It's not super relevant with the way that I trade and the way that I'm going to teach you today, but it is something to be aware of, and you need to just double check. Like anytime you're trading, you need to double check that you're on isolated if you're going to trade the way that I trade, right? You're going to need to. By the way, let me just go out and say, like, this is not real money. This is a fake account. So that, like, for demonstration purposes. Okay, so now that we covered cross and isolated, real quick, does anyone have any questions about cross and isolated? You guys can unmute. No? Okay, I think we're good. Okay, beautiful. All right, so let's continue. So now how do we practice good risk management really in whatever positions that we're going to take? Now, I'm going to start with scalping, okay? Scalping is something that I recommend everybody do because even when you are looking to swing trade, ideally, you will find your larger swing trade positions off of a scalp, right? But let's talk scalping for now. So in our previous streams, we've talked about how I trade ranges, right? We talked about how to get key levels and really like how are you looking for entries, right? The divergences on market cipher B, etc. So now when we have a key level, let's just say this is our key level. Actually, I missed this trade. Actually, I was front run. You know what? Let me come back over here. So this is my actual Bitcoin chart. We're gonna do all the rest of the stream on this, not on MEXC because I don't chart here. So this was my level, right? My macro range low. I got front run quite a little bit earlier in the week. This was my level, and I also got front run. The ones in the Discord know, like, I'm super frustrated because I got front run twice. Anyway, point is, when you find your key level, right? You know you're not taking any trades on a scalp unless price is at your key level. And the reason you're not doing that is because of risk management. If you're in the middle of nowhere, okay, let's pull up a clean chart. If you're in the middle of nowhere, you don't necessarily know where your stop loss would be or should be, especially on scalps, right? You don't know. So you got to wait for your key levels. And the closer you are to your key levels will determine what your risk is and how much leverage you are using. Now, for those who don't know, which you all should, if you're using leverage, or you should know what leverage is. But leverage is you are borrowing money from the exchange to have a larger position size than what is in your account. So if we use our $100 account balance USDT as an example, if you have $100 and you use 10x leverage, so you times it by 10, you're putting $1,000 on your position, right? It should be very simple. This should not be a surprise to you guys. Now, alternatively, what happens is when you're on a 10x leverage position, if the price moves up 1%, then you're actually up 10%, right? So everything is multiplied by 10, which means if price goes down 1%, then you're down 10% as well, right? So once we find our key level, right, let's just say our box was like this. Okay, and we got front run. Like this happened earlier today. Earlier this week, we got front run, right? And let's just say this is your very clearly defined stop loss. And when I say clearly defined, guys, I mean like when you're looking for trades and you're looking for your market structure and your key levels and whatever, you need to have a plan, okay? You can't just long and short randomly in the middle of nowhere and not know where it's considered invalid or valid or whatever the case is. Like you need to know if price breaks this exact dollar, then your idea for your trade is invalidated, right? That's the only way that this works. You can't practice this kind of management in the middle of like the ocean, which is something that I might bring up a couple times here. But when I say the middle of the ocean, I mean just in the middle of like nowhere, right? You have no TA. You're just trading based off of your indicators, which I don't recommend you do. You're going to get wrecked, right? So in this example here, we have a very clearly defined stop loss. Let's say this is our entry zone, and let's just say the stop loss is like there, right? Obviously, you're going to be using your confluences of vectors, so I wouldn't actually put my stop loss there. I would put it down here. But for demonstration's sake, let's say your stop loss is here. Now, when price enters your zone, right, you immediately need to think about what happens when the trade goes wrong and how you can essentially practice your good risk management. You do not ever long and leave the position open without a stop loss. So the very first thing that I do is I put a stop loss as soon as my trade is open, and I put it at my exact invalidation point. Okay, this is very important. And this goes back to me never ever getting liquidated. I don't ever get liquidated. I don't believe in liquidation. I think the exchanges take more money from you when you do get liquidated. So I don't exactly know how it works, but in my experience, I find I lose more than I would if I allow my liquidation. Anyway, so you open your position and you put your stop loss right away. Now, this is the key point. Depending on where you actually got to enter, and depending on how far you are from your invalidation point, will determine how much leverage you're able to use, okay? Now, leverage is a powerful tool. You can put more than you have on the trade, right? But it's also a way to minimize your risk. Now, people think that leverage is like so scary. Like, oh man, I can't leverage crypto. Crypto's already so volatile. Yeah, it is. But you can use it as a tool. It's not a bad thing. You actually limit your risk by using higher leverage. Me personally, I use like 80x leverage at least, right? Because I'm looking for sniper entries. I have very clear points. I have very clear invalidations, and I know where I'm getting. So let's say this is our box, and let's say that this actually did wick, which it should have, but it didn't. Stupid. Anyway, so let's say that wicked and I ended up getting in, right? If you were to draw your like tool thing, and you put a percentage down, in this case, I have a 0.8% stop loss, right? For my trade to be invalidated. Now, I can adjust how much I'm putting on the position based on how far my stop loss is going to be. And depending on where I enter will change this number, right? So if I got in here, my stop loss is going to be here, versus if I get in here, my stop loss is still going to be here, right? So you can use higher leverage on a position where you're closer to your stop loss than on a position that you're further than on your stop loss, obviously, right? You can use higher leverage here than you can here by putting the same amount on the trade. So all of the YouTubers talk about 1% of your account or 3% of your account or 5% of your account, right? Like that's how much you should be risking per trade. Now, I take a different approach for me personally. And I kind of developed this habit when I was starting out trading and I didn't have a large amount of capital. Now, don't get me wrong. Trading, let's just say 2 to 5% of your capital isn't a bad idea in whatsoever, right? It is practicing good management. However, I would confidently say for the most of us, and at least for the ones that are in my community here, we're all new traders. We're not trading with, 500,000, a million, or 100,000, or whatever the number is. A couple, like most of us, I would say, have a few $100, couple thousand maybe, right? So to go back to our example of $100, if you're trading 1% of $100, I mean, that's literally $1 on your trade. And that's not going to, at least for me, I can speak for myself, like, being $1 on a trade is not gonna, I mean, I'm obviously not gonna get up in the morning for that. I'm not gonna be excited for that or anything like that. So what I do is I trade units. Okay. So think of like betting sizes at the casino, for example, where you have like a minimum bet. That's what I do. So if I have $100 in my trading account, right, I would bet $20 or $10 per trade as opposed to 1% or 5% or 10%, right? So I want you to think in terms of unit sizes, not in percentages. Because I mean, let's be real, like $100 is not a big account at all. And a lot of us, like, even if you lose the full 100, you can throw in another 100 and still practice these same unit size logic that I'm about to teach you now. So what I would do on this $100 example is I bet $20 in unit sizes per trade. Okay. So if we know that we're allowed to lose $20 per trade, then we need to adjust our stop loss depending on where our entry is. And guys, this happens quick. Like sometimes, I mean, we're on the 1 hour candles here. So, we don't have so much detail within this candle. But if we jump down, which I'm not going to because then I have to scroll so far, like this move happens pretty quick. So you got to be quick with it. But let's just say you didn't catch the wick and you got in like here, right? Now you need to account for this much of a stop loss, and it needs to be based around your $20 unit size. All right. Now, the closer you get, the more you can put on your position. So let's go back to that same example, right? Let's just say, let's see, how much is it from here? Okay, so this is a 1.5% stop loss. You know what? Let's make it 2%. So it's easy for numbers' sake. Or make it 1%. Yeah, 1%. Okay, let's say you caught the wick exactly. You're about 1% on the stop loss, right? If $20 is the amount that you're allowed to lose, now I suck at math. I do all this like before my entry, so I'm well aware of it. But so $20 is what we're allowed to lose, right? If you enter here, you can use a position size that allows you to lose $20 when you go down the 1%, which I don't know what that would be. I suck at math, like I just said. Whereas if you enter here, right, you would have to use a smaller position size because your drawdown goes further than that 1%. I hope that's making sense. I really hope that's making sense. Guys, I'm rusty today. I haven't streamed in a week if you haven't noticed that I'm rusty. So I apologize in advance. We'd have to go over this a couple times. But I hope this is making sense right now. Your position size is what changes, right? So again, I do not believe in liquidation because let's just say your liquidation is somewhere here. No one should ever get liquidated. You should always have a very clear and concise stop loss point. Okay, always. So forget liquidation. So if liquidation doesn't matter, which it doesn't because we're never ever going to get liquidated, based on our stop loss, we'll determine how much we can put on the position. So with our $20, with whatever X leverage, I'm not going to do the math because I suck at math. Whatever your leverage is, let's just say when you get in at this level, you can get away with 100X leverage. And if it hits this point, you lose $20. Here, you can use 50X leverage. And if it hits here, you lose your $20. Now, your leverage is not what's important. People confuse leverage with position size. Your position size is what's important. Your leverage allows you to put larger position sizes in your trade. But again, all leverage does is change your liquidation point. But liquidation, we're not worried on. We're not focused on. This would be your liquidation on 100x leverage. This would be your liquidation on 50x leverage. But either way, we have a clear stop loss, right? So we're not worried about the leverage. And this is something that confuses a lot of people. This is something that it confuses a lot of people, and like this is why people think it's scary. Like, oh, you can get liquidated, whatever. Well, no, we have a very clear stop loss. So at the end of the day, it doesn't matter if you're on 100x leverage or 50x leverage because we have a very clear stop loss. So it literally doesn't matter, right? But your leverage is what allows you to put greater position sizes. So if you can get good at having sniper entries, as I like to call it, right? You have sniper entries. You know exactly where you want to get in. You know exactly where you want to get out. You know, you have a very clear invalidation. You have a very clear entry. Then you can adjust and plan your leverage and your position size accordingly. Now, all of your trades should be planned out before you take them, really. You should never just look at market cipher and say, oh man, we're ready to long right now. Like this on the 1 hour looks like it could clip and we could long, but you don't typically want to do that, right? You want to wait for price to have your levels, to be at your levels. You want to have your alerts ready and so forth. And a part of planning your trades is planning how much you're going to put on the trade and where your stop loss is, of course, right? There's this tool that you can use. I don't ever use it, but you can use it, right? And you can start to set targets and you can have your liquidation or your stop loss point, whatever. This is something especially for the beginners that I very much recommend you play with, because you'll have a good sense of what your risk to reward ratio is, which is really what all your risk management comes down to. Okay. Now, this is like super psychological. Okay. The market is designed to wreck you. Remember this, right? We've talked about this many times. We know what the vector candles are, right? Vector candles are people getting trapped and so forth. And if you think about it, where do most people put their stop losses, right? They put it under the last swing low. Well, when we have vector candles like this, and then we fall down, where does it break? It breaks under the swing low. So if we know that the market makers are designed to wreck us, we need to take that into account whenever we're trading. That's why you want to wait for your perfect levels and your sniper entries, right? So let's use this box now. Forget this wick. Let's use this box as the as an example. If this is my clear entry or my clear zone, and this is my clear stop loss, let's say right over here, how do I enter? What do I do? All right, well, we're going to still use our $20 example. So there's two ways to enter. You can either get a sniper entry, which is like right here, or not necessarily there, but out. You get one entry, right? Like one position. You put your whole position on. You can put your whole $20 on, right? And then you put your stop loss right away. Or you can have a shotgun entry where you start to get multiple positions. So if our position size is $20, you can either have one entry of $20 or you can have, for example, 4 entries of $5 and split it up, because obviously price wicks down pretty quick. Now, the benefit of having this way is you'll have a very clear entry, right? Your like dollar amount entry will be to the dollar, and you'll have a very clear with your very clear stop loss, you can calculate this beforehand. However, when you have a shotgun entry like this, you can get a better entry than a sniper here. However, not necessarily all of your shotgun bullets are going to get hit, right? Because if price comes down and wicks just like this, then you didn't get in on this last one. So what happens when this situation arises, right? Where you didn't get your whole position, price started to move. What do? Well, at that point, you can mark it in your last quarter position, and then you have to adjust, right? Because your position will be different based on where you enter. Okay, am I making sense so far? Does anyone have any questions so far?
I have a question.
Yes, sir.
I told you I didn't want to go on stream, but you're talking too good today.
No worries.
Yeah, but I use the cross margin, as you know, and you basically drawing how I trade right now.
Yep.
Uh, I never find the right spot, but I 25, 50, 75, 100, on the way down.
Yep.
And if I break it, I set the stop loss. Uh, so I didn't miss the upturn this time, but I didn't get a good entry either. But yeah, you know,
So sorry, what's the question? Like how are you like how do you know how much leverage to use? Is that your question?
oh yeah, yeah, yeah. The question, I actually don't have a question. I just want
Oh,
to
okay.
confirm what you're saying.
Okay, yeah,
uh,
yeah.
I use trading accounts, and I have spot accounts, and that's fucking boring, as you say.
Yeah.
But I use leverage with $100 or $50. I don't care, and cross margin. But I use that cross margin as a kind of pillow, not to get liquidated.
Yeah. No, okay, so I don't use cross because I have very clearly defined stop losses. And if price breaks my stop loss, like if it hits my stop loss, then my idea for the trade is invalidated. So, you know what I'm saying? Like trading is such a psychological game that you need to have a plan. Like if you can't just long or short and then like you need to have a reason why, right? Like if you took a position and I ever put you on the spot and I ask why did you take that position, you need to tell me this and this is why I took it, right? Like if you don't have an answer for why you took the position or a good enough answer, then you're not in a good position. And risk management is important because, right now, again, in this $100 example, right? You have $100. If you lose $100, it's not the end of the world for most people. I don't know everyone's financial situation, but $100 is not that much money, right? Let's just say you get super lucky and you 200x leverage, right? Like 10 positions, and your $100 is now worth like 20K, right? I would argue, okay, 20K, if you lose 20K, it's a pretty big hit. You can lose that money twice as fast, and you're not going to get lucky on that sixth time, and you're going to blow way more. Like you're going to blow the entire account, and it takes you double the amount to get back to it. So under cross, like it's not that cross is bad. The problem with cross is if you exceed where your 100x would have been, like if you where your liquidation would have been, then your emotions might play into how you react, right? Like I'm sure we've all been in a situation where we've been down, 50, 60%, and you're like, "Damn, like I really should close this trade, like I'm down 50%." Whatever. And then you
Yeah,
hesitate, you hesitate. Like I'm sure that we've all done it like at some point. I know I've
yeah,
done it, especially at the beginning, right?
yes,
So,
of course.
yeah.
But I also have another problem. When I'm in the green, I have a tender to close my whatever way the price goes on the 46% mark. And when I wake up, it's like should be a 100 trade.
Yeah. I mean, that's another topic for another day.
Yeah, yeah. Sorry about that.
No, 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 that's okay, but taking profits and such for sure. Like, we could talk about that perhaps next time. But, that's why I don't like cross, because cross it just adds an extra emotional element. And obviously, like as human beings, we are emotional. We've all seen minus 50 and then been like, oh, we should close it. And then we don't. And then it goes minus 60. And then we're like, man, we should have closed it at minus 50. But then you don't close it at minus 60. And then now you're at minus 80 and you're liquidated. You know what I'm saying? So or in your case, because you're on cross, you're beyond minus 100, right? Because
Yeah, sometimes. Yes,
yeah,
of
exactly.
course.
So if that ever happens, like, at some point, my whole point to this is at some point you need to just like know that you were wrong. And adding to your margin is a horrible idea because, depending on how big your accounts are, and again, I've been there. Like when I started trading, I made a lot of money at the beginning. Luck, I think beginner's luck is a very big thing with trading, but I ended up losing a lot of it. And, you add to your position and you're like, okay, well, it has to go up and then it keeps dropping and then it has to go up and then it keeps dropping. Right? Like how many people, like what about the people that bought the dip? Let's go back on here. Let's go on the daily. Like look at this, right? I mean, this is extreme. We're on the daily chart. Don't
Yeah.
let's get rid of this. What about the people that bought the dip right here? You bought the dip. Went up a little bit, sure, and then it went down. Oh, it's gonna come up, no worries. Comes down. Oh, it's gonna come up, no worries. And we all know how the last year and a half, 2 years have been.
No, no, yo, last year in March, mark that out.
Last
No,
March,
yeah, the one there, yes,
yeah,
there, I lost money.
yeah, yeah,
Yeah, fuck, man, I long from the bottom to the top, and I leave it open.
yeah. That's what I'm
Wow.
saying. So
Yeah,
that's why your risk management and it's such a psychological thing. Like it's a psychological game. Remember, the market is. I think someone in the chat the other day was like, yeah, like someone said 90% of it is psychological. And my response was, no, man, 100% of it is. 100% of this game is psychological. 100% of it.
yeah,
They play on
120.
emotions, man. They play on emotions. So that's why you need to protect your capital, right? Protecting your capital is number one. We know that 95% of traders lose, right? 90%, 95% of retail traders. Um,
Yeah,
so
that's what I like about you, because you talk about leverage, and it's much more easier to go in with $100, 100x, and just like let it go when you find a bottom or a top,
yeah.
and you can go like DCA in on a leverage trade.
Yeah, you absolutely can. Man, there's a bunch of different ways to do it. You can get your shotgun entries, you can get your sniper entries, and it really all comes down to like how good you are and how confident you are with your TA, right? Like I over the past, couple years have practiced good, like I like to think that I've gotten good at TA and I've gotten good at like having my levels. And the reason at the beginning why I said I recommend everyone learns how to scalp is because when you're looking for swing trades, right? When like you have your swing levels and you have your scalp levels. When you're in your swing trade zone, it all starts off as a scalp, right? Like no one ever wants to
Yeah,
start in the negative. So if you learn how to scalp, then you will learn how to swing because swinging
my
I
best
think is
swing trade
easier.
has been from scalp. Sorry, man.
Yeah, no worries, no worries. Yeah, but swinging is easier.
Yeah, yeah,
Scalping,
but
but everyone should
scalp
learn how
trade,
to catch this
yeah,
wick. Like you should learn it, right?
definitely,
So
100%.
so with that in mind, right? Depending on how you trade, will determine where your liquidation is, or not liquidation. I keep saying liquidation, where your stop loss is, and it needs to be a very clearly defined reason for why you're entering and a very clearly like way to get out, right? Let's just say prior to this drop, right? Let's just say for whatever reason you longed here. Okay, well your stop loss would have to go under the last swing low, and you know that if it goes under your swing low, like it needs to make sense. Well, why is your trade invalidated? Well, now you just made a lower low, so your market structure is continuing in a downtrend. Let's just say you took it on the basis of like you're expecting a higher low and then like this, right? Well, if it makes a lower low, then your idea of making higher lows and higher highs, switching market structure is wrong. So that's why you're going to get out, right? That's why I don't believe in cross, because on top of the whole emotion factor, yeah, you could have, let's just say this was your liquidation, it could have done this and bounced back up, but it also could have just, continued down. But you need to have reasons for it. Like I said, man, it's a psychological game. The market's run by money. Money is a very emotional topic, obviously. It runs the world. So you need to have very clearly defined entries and very clearly defined exits. And we'll talk about, again, take profits another time. But it's very
Yeah, I
important. It's very
100%
important.
agree with you on
Yeah.
that one. Yeah,
So,
sorry about interrupting, but I just have to say I agree with you on a cross margin. Don't do it, guys. But I use it because, yeah, it's just, over the years it's been the way, you
yeah,
know.
it has its perks, it has its benefits, right? Especially when like, the price is dropping like really really quick and you're like waiting because if price is dropping, like I remember there was a point where we had like a $10,000 red candle in an hour. Like if that happens, and you're going in on like 50x leverage, right? It's easy to get liquidated, right? It's
Yeah,
very easy to get liquidated, but so in that sense, I understand it. But for me, and what I would recommend is to practice getting good at your entries, right? Like super solid entries. Like let's go back, right? Let's go back to my actual chart. I never adjusted, right? For the stream. This was my entry. I got front run, and this was my entry, and I got
yeah,
front run.
yeah. You told that
I
on
got front
the
run. Yeah,
Discord.
I got front run. So
Yeah,
so
yeah,
let's
yeah.
so let's look at this example, right? Again, we're on the 1 hour. I never got in
But
on these trades, right? I didn't get in. I wanted to. I never did. Any point where if the price touched the box, I was ready to
yeah,
pull the
in
trigger.
the
I had
air.
orders. I had orders here. One, two, three. I had
Mhm.
shotgun orders. Had them ready.
Yeah,
Okay.
nice.
It didn't obviously didn't hit. So what do I do? I'm in a long now. I am. But where's my stop loss, right? So if this line is my stop loss, the way I do my TA, like my stop loss would be like, somewhere here, right? This is like, 1.8% stop loss. I cannot do 50x leverage, for example, on a 2% stop loss because that's 100% of my position and I will get liquidated. But I don't believe in getting liquidated. So I have to use less than 50x leverage to avoid liquidation in this example. And that is actually if I got in on this wick, which I didn't, right? But if I hit my positions, then I can like look for basically what we had here. Like if this was like this, oh man, that would have been way better. So what did I do now? So
Yo,
I got
dude,
in I got in somewhere
I
here.
do. Yeah, I do 75% stop loss on $100 trade, but I always add on the trade, and I hope for my levels or lines will hold.
But let
You
me tell
know,
you, let me tell you the problem
that's
with that
how I
though.
do it.
The problem with that is, if you're putting 75%, like a fixed number in your mind based on the percentage, you're already approaching trading incorrectly because, right, if you get in here versus you get in here and your stop loss is here, then that's going to change that figure. You can't go in 75% of your account or whatever the number, right? It all depends
Yeah,
on where your liquidation is, right? Keep in mind, leverage is not what's important. It's the position size. Leverage allows you to make your $100 be $10,000 if you need it, if you want it to. But it's where your sniper entry or where your exact stop loss is that invalidates it. Like it's where that comes into play. So remember, it's all psychological, right? So what
yeah.
did I do in
So
this case? We're on the
when
1 hour
you
time frame. Sorry.
miss the entry, you don't trade if you don't see the price continue up.
So I'm going to be honest, like you should be waiting for your entries, and if it doesn't hit your entries, oh well. However, FOMO gets the best of me like it does for everybody. No, listen, like I'm not
Yeah,
going to
bro.
sit here and say I follow like the objective rules to the T because I don't. Like FOMO 100% hits, but I can trade anything, right? Like we're on the 1 hour here and I missed my entry. This was my swing long. So how did I
Yeah,
get in, right? There's a quick little range here and I got in on a scalp and I just held it up, right?
yeah.
Now, if I was getting
Good.
in on a swing trade, where would your stop loss be? Well, if this is your clear invalidation, then to be honest with you, like if you let's just say you got in here, your stop loss in my opinion, most people will put it here and then they will lose. You need to put it down here because this was my initial idea for the trade. And although we hit this low, right, that doesn't mean we're going to 100K just on this wick. So
Yeah.
the reason I had this level, I mean, it could like it doesn't matter for this example, but this is the macro range low. I thought they were gonna do do an SFP off this level, which is why it was like I did not at all trade this. I wasn't interested in it until it hit the box, and I'm so mad that it didn't hit it. But anyway, like if they took it, I would have been way more bullish. Anyway, so where would you put your stop loss in this case if you got in there? If for me, it has to be down here. Now let's look. Let's go down. Let's just give or take, that's a 4% stop loss, right? So if you 25x leverage on whatever amount that is, right? You're going to get liquidated on a 4%. So unless you're on cross, you can't go 25x. And actually, if you guys don't know, the exchanges liquidate you when you're minus 80% because they need to protect their own capital. Remember, you're borrowing their money,
Yes.
right? And
That's
for
very true.
those who don't
Remember that.
for those who don't know, which you should, but for those who don't know, the way that you lose money, like we all know it's multiplied, right? But the position is the same. If Ethereum is 2,000, let's just say Ethereum is 2,000, right? And you have $20 and you're 100x leverage, well, your 20 sits on top of their 1980 and your total position is still 2,000. But when you go down, like when the price goes down $20, your 20, remember, is on top of their 1980. So you lose your money before they lose theirs. And to protect their money, they won't let this get to 20 because what happens if Ethereum goes down $21? Then they just lost $1. So they don't even allow this. What will happen is at 15, right? So instead of it going down minus 20, if ETH goes down minus $15 or $16, I believe it's 80%, then they will close your position, yet they will take your full 20. That's why I don't believe in getting liquidated, because liquidation, they still take the amount, but you didn't like lose that amount, right? And it's to
Yeah.
cover there. So I don't know if many people know that concept. I haven't heard anyone ever talk about that, but that's what's happening when you're leveraging,
Oh
right?
yeah, I've seen it. I've seen it. I've
Yeah.
been liquidated sometimes, but I usually set the stop loss very low. But I'm always, if I have time, I'm buying in more. Like you say, you shouldn't do though, but I do it. But
I mean, again,
that is that yeah. But it's only when I reach the right levels I will do that. I will not go long or short today.
Yeah. Yeah. No, man, like
Can I
look,
say
again,
something?
yeah.
Hello, can I say something? Yeah, so this is a friend who does my this thing. Okay, trading. Okay, he does trading. Like he never puts a stop loss or something. Like if he has a 5 BTC account, he will trade with zero point 0.1 BTC and he'll average it whenever the trade goes the opposite way. Like whenever the price reaches in the opposite way,
Yeah.
like at a resistance level, he'll average it down. So I've never seen him getting liquidated like that. He never puts a stop loss also. Is that a good like a trading strategy? Like is that like a real trading strategy?
Objectively, it's not a good trading strategy, and I'll tell you
No.
why. I'll tell you why.
Okay.
If your friend is putting in, I mean, if he's only putting in 0.1 Bitcoin, let's just say, and when he has a 5 Bitcoin account, like that is good, right? However, the idea of consistently just adding to your margin or adding to your position, like what happens if it doesn't come back? And let's look at this, right? Let's go Luna. We all know what happened to Luna. Or we all should.
Yeah.
We all should know what happened to Luna. So let's just say your friend, I lost a lot of money on Luna, by the way. So let's just say your friend, bought, why can I not? Whatever, man. Luna was $100 and then, or whatever it was, and then it wasn't.
Yeah,
What
it
happens
fell.
if
That's
you
Lunac.
what happens if you buy Luna at 200 and then it goes down and then you buy it at 190 and then you buy it at 180, 150, 130 and then you go and then the lower it goes, the heavier you will go, right? Like you're trying to average out your
No, no,
entry.
no, no, no. No, he doesn't average. Like, the concept he told me was like double, like what we say. If you're doing like point 0.1 BTC at the next resistance, like wherever if the price is going opposite, at the next hugest resistance, we double it and whatever. Like if you're in a long, we'll buy that so that our this thing will be at the midpoint, like whatever
Yeah,
resistance we
yeah.
have
So that's
and
that yeah.
what
So that's averaging, right? He's averaging.
yeah.
If you buy so let's just
He,
say
he's averaging double the amount whatever he's bought at earlier. Like if you're buying at point 0.1, the next resistance he'll be doing if it's going the opposite, it'll be 0.2, and the next will be 0.4, and next will be 0.8.
yeah, yeah,
So
yeah.
every
No,
time,
I understand. So
yeah.
he's still averaging his entry down, but because he's going heavier, like it's coming down like, a a larger amount. But this goes back to my point. Like what happens if you buy one Luna here and it goes down, right? And then here here you buy 2 Luna, here you buy 4 Luna, right? I mean, this is not like let's go. This is at $1 still. Like let's go when it was at 100, right? Luna's $100. Let's just say, like, look how much I have to scroll. So Luna's at $100, right? 104. You buy there. You buy 1 Luna. Comes down to 102. You buy it. So that's double. Now you did 2. Now you did 4. Now you did 8. Now you did 16, 32, 64, right? Like, and don't get me wrong. Like, listen, I understand. Luna is a anomaly. Like it's not a normal case scenario. I understand this, okay? But you can't think like that because what happens when you keep doubling and eventually, man, and what happens when you run out? And not only that, so let me tell you a quick story. One time I was playing at the casino, and for me to lose, I was doing something similar to this strategy, and for me to lose all of my money, I had to lose 7. I was playing blackjack. I had to lose 7 hands in a row, okay, to lose everything. Not only did I lose 7 in a row, not only did I lose 7 in a row, but 6 out of the 7 that the dealer had blackjack. So I mean that's just a separate story, but stupid. But anyway, my point is right. If you're gonna keep doubling it, eventually, like you're gonna run out of money, right? Let's just say even if it takes 15 times that your friend averages down, right? Well, it could do that. It absolutely could do that. And then not only that, even if you were like okay, it could do
no, the
that.
thing is, he's so confident about his trade. Like he doesn't care. Like I think he's in some paid group. I don't know. Like whichever guy. I don't know. I don't. He doesn't like show that much. But he's getting like good levels. He'll get an entry. If the trade goes in opposite way, he look for the next resistance. And I never seen him liquidate or like I have never seen him like lose money. And I think he's the only person like in my like area where not area like my friends group who actually makes money because he's having a huge capital and he manages his risk by trading like with lesser amount at first and then averaging it down again. So I was like really fascinated by this concept. I'm new to trading, so I don't know much about it. So I was like, okay, maybe I'll also do that the same thing. And if something goes wrong, I'll ask him to put his money on mine and save me. Like the week, whatever goes up, it will come down, right? At resistance, like at least at some good resistance, it will come down. So like if we average like even I have done that. Even I think I have done that 3 times, I guess, where
Yeah.
I went like 60-70% negative, and then I averaged it down when I felt like it's gonna come down at the resistance, and I got saved like without losing any money. So I was like fascinated with that concept. But that's what I traded in forex, and it never worked like that because forex is a different case system. Like
I'll
we
tell
can't
you.
do that there.
I'm gonna tell you the same thing. Like it will work until it doesn't, right? Like
Yeah.
price
Okay.
will never go up and price will never go down straight, right? But like
Yeah.
you and your friend's case scenario, you're saying it hasn't happened and whatever. I mean, if he has 5 Bitcoin, right? Let's
Mm.
just say he's trading with 100,000, and he's putting 0.1 Bitcoin on, so he's putting $2,000 on per trade. He has 100,000. 1, 2. right? That is so ugly. And so he's putting 2,000 on a $100,000 position, right? Like, how many times can you double that?
Yeah.
Right? He has 100,000. He has 5 Bitcoin, 2,000,
Yeah.
right? So 2, 4, 8,
For
16,
8.
32. He can only double it like five times.
Yeah.
So the question
He
is,
told me that.
so the
Yeah,
question is
he
though,
told
how
me.
is he trading though? Like if it's on the swing trade level, right? Like we're on the 4 hour, okay?
Yeah, swing trade. He doesn't scalp. He always does swing.
Okay, so
Larger trade.
but now you got to think like, okay, so if he puts 2,000 in here, right? And then where's the next time he's putting another 4,000 here, or is it here on this dip, right? Is it or is
Maybe.
it? Oh, how about this? How about this? Let me ask you this. Look, what happens on the 4 hour time frame when price comes down, and then he was kind of hesitant to buy because he didn't know if it was going to keep going down. Now it starts going up, right? But it's not going up for a small amount of time. Remember, we're on the 4 hour time frame, so this is, give or take, right? A day. So it's going up for a whole day, and then now he's like, okay, man, my entry's still here. It started to go up. I'm gonna add here, right? So now the entry is here. The average entry is here, or whatever. Right? He gets to break even, and then it continues to come down, and then shit. What do I do? Whatever, right? Let's just say it starts to bounce here. Over the next 8 hours, it's starting to go up. So he's like, okay, let me buy. Like my point is I don't know, man. I
No,
think it works until it doesn't. I'll tell you that. It'll work until it doesn't.
Okay, I understood. Like,
And
I'm not wasting your time. Like, it's okay. I understood.
yeah,
Like, yeah, it's true. Even I thought about that. Like, what if the
no,
price,
man.
like, the money gets over? Yeah.
Man, it works until it doesn't. And what was the very first thing that I told you? You can lose your money twice as fast as you can make it. If you lose,
Yeah.
if you have $100,000 and you lose 50% of it, well, now you're at 50,000. For you to get back to 100,000, you need to make 100%.
Yeah, I understood. Yeah. It's true.
Right? So again, I don't know your friend's situation and how much he's trading and etc. Whatever the case is, but I don't want you guys to think like this, because you can never ever think this. Never be like, man, Bitcoin can't do this. Don't be like, man, Bitcoin's been going down for the past year. It can't keep going down. Right? Don't think that it can. Don't think Bitcoin can't come down to 3,000. It can.
I'm still bearish though. I'm not. I think it's just a rally going on right now.
Whatever happens in the future, I don't know. We'll see. I think we're gonna have some more up. Personally, it depends on the time frame that you're looking at, though. But my point is don't think like look how long this whole this was half a year. Excuse me, or from here, right? This is 200 days. Oh man, Bitcoin's kind of been down like for the past 200 days. It has to go up here. We're at support. It has to. Bro, it doesn't have to do anything. It went down another 40% from there. More even, another 50%. So I don't want you to think like that. And when you start to think like that, you start developing these like bad habits of like, now you're hopeful, right? Now you're just hopeful. Now you're like, oh man, like I really hope it needs to go. It has to go up. I need it to, whatever. Then you start joining groups and you start convincing other people, or trying to convince other people that it's going to go up, as if anyone has control over it. No, man, it doesn't make sense. So don't think like that, because Bitcoin can be as irrational as it wants. It can do whatever it wants, and it will wreck you. It will. I promise you, it will wreck your friend. I promise you, it will.
I hope not. Okay, then thank you.
Yeah, no worries. Anyone else have any questions right now?
By the way, I'm the spot versus futures guy. If you have time, let me like that at the end of the video or something. Tell about that too.
To talk about what? Sorry, spot.
The spot versus futures. I told, right? I texted in the general chat. Nived.
Yeah, I mean, spot is like, man, I don't really trade spot. It's the same concept, but the only difference is you can't get liquidated. So like, if you bought Bitcoin at 30,000, or no, let's go even more extreme. If you bought Bitcoin at 60,000, you bought it at the top. The only way that you realize that negative 40,000, I guess like spot position, is if you close it, right? Like you're not going to get your money back until it comes back up, but you can't get liquidated. Like you can just hold it. Even if it goes to zero, you still have 1 Bitcoin.
But don't you think like we have a upper hand when we're using cipher or something like that with the money flow and shit?
I mean, yeah, like you have an upper hand, but you know, did anybody know that 67 was the like exact top? Nobody knew that, right? It's easy to look in hindsight. You can have an idea, but it's just like right now, like you could have an idea of if we're going to go up or down. Should you buy it or should you wait, right? Like you don't know. It's the same thing.
Yeah.
It's very easy in hindsight.
Okay. Thank you.
Yeah, no worries. So yeah, guys, I want you to get into the habit of like, you know, give yourself a unit size, and you guys know your financial situation, right? Like if you have a trading account and you can spare, if you have a $100 trading account but you have a full-time job and like, you know, you just don't want to risk too much, like you're just trying it out, you're just starting out, you have $100 in your account, whatever the case is. If you lose it, it sucks, but you can put more and whatever. Like think of a position size similar to like your hand size in poker, right? Like whatever you're playing blackjack, or not, sorry, not poker. You're playing blackjack, whatever your bet size is, like your unit size. Think of it in terms of that, not your percentage, unless you're trading with like 100K. Then like, okay, use percentages. But if you're not, think of it in unit sizes, and you know, manage your risk accordingly before you do your trade. When you're set up, wherever your stop loss is, or if you want to be kind of like practicing not the best habits, you want to like allow a liquidation, which I don't recommend, but whatever, it is what it is. Y'all are grown, like you can do whatever you want. You need to make sure that when you're opening your position, when you're at that level, that's when you lose that amount of money, and no more than that money. Because this is the next thing, and this is huge, guys. Like I've seen so many times people get wrecked and then they get upset. Me personally, every single trade that I lose, and I lose, man. No one is gonna ever win everything. Sometimes I lose. Every single trade that I lose, every single one, if I lose, I'm not upset. Because if I break my rules, right, and I FOMO in, like I said here, like I got in somewhere here. If I break my rules, then at the very least, the number one rule that I follow is good risk management, because you can lose your money twice as fast as you can make it. So if I got in on the 1 hour, then I'm putting my stop loss here. And if I have a $100 account, yeah, I'm not going to have that big of a position, but I would rather be in no trade or like a smaller position trade than be in the red, right? No one likes being in the red, and no one knows what's going to happen next. So it's very important that, you know, you trade accordingly. And so every single trade that I lose, every single one, I'm not upset about it, because I practiced good risk management and I followed my my risk management, whatever. And I did not allow myself to lose more than my unit size. And you have to think of it in a sense like if you lose, it sucks, but you took the gamble, and at the end of the day, it's all probabilities, right? Like you need to say, okay, well, I thought it was going to work because of this, and this. It didn't end up working, but objectively, it was a good trade, right? If this wick came down, did not touch my zone, and then I longed here, and then it came up, and then it came down, touched my zone, and then bounced, then I would be pissed, because now I just took a loss, and if I was patient and I was in my zone, then I would have went up. So it's all psychological. Now it sucks, unfortunately, that I missed this because they didn't come to my zone. But you know, this is how you need to think. It's all psychological. You have to protect your capital at all times. You have to. Okay? Now, we're going to talk about when it comes to our scalping, right? So we already know that the closer you are to your level, the larger of a position size you can put, because it's a less distance for your stop loss, right? Let's see, you entered there, and then, so because it's less distance of your stop loss, you can put a larger position size, because either way, you're going to lose $20, right? Now, let's talk about taking profits, quite like a little bit. I'll do a separate video completely on that, but I get a lot of questions, and by the way, let me just mention, every single trade that I post in the Discord or whatever, I've taken some profits on. I don't ever share unless I've taken some profits, right? because I don't know. That's just something that if you talk and it can get jinxed and go the other way, whatever. Now, when I'm scalping, super scalping, right? I can't even say scalping because even when I'm swing trading, you enter as a scalp, right? We already said that. You don't enter in on an average price, you enter in on an exact price. So, the closer I can get to my level, now scalps or swing zones are way larger than scalp zones, but I digress. When you are very close to your invalidation level, like very, very close, you can put more of a position size while still maintaining the same amount of risk, which is your $20 unit size. However, your position size will be much larger. So let's talk in terms of ETH because it's easier. Let's just say here, let's say you're 100x leverage, right? So here you're at a $2,000 position size. And let's just say here you're at a $1,000 position size, right? Now, what do I do in terms of taking profits and how can I, protect my capital? Remember, that's like the motto of the day. Like that's what you need to remember is protect your capital. Most traders lose. So if you're not losing, even if you're not making money, if you're not losing, then you're already ahead of 95% of people. Let's say you have $20, you're new to the game or whatever, you found your exact level. However, I mean, like, let's be objective. Like on 100x leverage, and if you're putting your hold like $20, you're kind of like this is a large position. For having only $20, 2,000 is a large position. So what do? Right? You look for your levels, you look for your TPs, you do your TA, you pull your volume, whatever. But oftentimes what I will do is I will enter, right? And I will take profit very quick on a scalp that is like 100x leverage or like 150x leverage or whatever the case is. Remember, every single trade that you take should be your unit size. In this case, is $20. So if you find yourself in a position where you're not over leveraged because you're still maintaining your $20 unit size, but you have a larger than, we'll say, normal or usual position size, I like to take profits very soon. And by very soon, I mean, if I caught this wick, I'm probably taking profits like here, 0.5% up. And I will take 50%, give or take, of my position out. Right? Remember, the closer you can get to your levels, the higher of a position size that you can take. Now, we don't know what's going to happen in the market, but if let's just say you're comfortable having 1 ETH on the trade, but it comes down to right here where your invalidation is, well, now you can 200x that, right? Not 100x, you can 200x it. So now if you have $4,000 on your trade with only $20 of risk, right? As soon as this comes up to here, take 2,000 out, and then now you can let the 2,000 run. That's the benefit of getting these super precise sniper entries. Now, I mean, 200x is savage. I mean, I've maybe pulled it off, a couple times, but, that's the approach that you need to take. And that's what I do. I take profits very soon, right? Because you need to protect your capital. That's the name of the game, is protect your capital. Guys, the market's going to be here tomorrow. It's going to be here next week, next month, next year. But what might not be is your funds because you were belligerent with your risk management. And I said in the very beginning, this is not the sexiest topic, and I understand that, but it is so important for you to protect your capital, right? 95% of traders lose. If you're not losing, even if you're not profitable, just don't lose money. Literally as simple as that. If you don't lose money. Any questions?
Yeah, I totally agree with you. And I would have to say that I'm usually in the green, but sometimes I've been liquidated. But after what I've been hearing today, it's like, the mindset is like all over the board, you know.
Yeah, man, the whole game is psychological.
Yeah.
You know, and then for the individual that was talking about his friend earlier, right? Like you got to play your emotions into it, using that logic of like, oh, I'll double it every time. Well, what happens when you're supposed to double it here, but now you're scared,
Yeah.
right?
He,
Like
he was talking like I was talking, you know.
yeah,
That's why I'm back on, because he was like, yeah, trading like I do. And you said dumbasses that do that will get fucked or wrecked or something.
yeah, man, you will, dude. The market has a way of humbling you, and I'm telling you, like beginner's
Yeah.
luck is a very big thing when it comes to trading, a very very big thing. You know, so
Yeah, hi Gio. So it's not about you know, that's what the makers want, right? People, that's what they want people to do.
yeah, the
They
whole
play with the
so
psychology.
you got to
They want
remember.
people to invest more amount again and again.
Yeah, absolutely. So, CJ, sorry, do you mind just muting? Just because your mic is still doing that thing. So I'm just gonna ask you if you have any questions, just write it in chat for me, please and thank you. But, yeah. So you know, when market makers are chasing vectors, right? So we know about our vector candles, right? We know there's liquidity here. When they're chasing vectors, you got to remember when like they're longing. Like, okay, when price is rising, people are longing. So people are longing, people are longing. Where on the 5 minute time frame are these people putting their stop losses? Probably maybe some under this level, some under this level, some under this level, whatever. Well, look where our vector candles are, right? These are the stop losses. What happens? They're hunting the stop losses, right? That's why it's important for you to have your risk management. Like these guys, whoever's longing here probably has their stop losses right over here. Well, look at the vector candle, right? So the whole market is moved by like this principle, right? If you don't get liquid, remember, okay, liquidation is a market order in the opposite direction. So if you're long here and your liquidation is here, like this is a market short. Essentially, you're selling your long position at a loss, right? So that being said, they're forcing you to close your position. If there was no such thing as liquidation, then no one would ever close a losing position and there would be no market because the market makers need to make their money, right? But they're forcing you to close the position. That's what the whole game, the whole system is run on that. And what happens in human psychology is we're greedy and we need dopamine hits and whatever. And we over leverage and that's very often the case. How many times have we seen a 1 minute candle? Even today, we had this today. We had it literally today. Like, let's look at this. Look at this example right over here. We had a 1 minute candle up, right? People probably 100x, 200x this wick. Technically, it's a bearish candle, right? So maybe saw a little bit of profit, continued to short. Oh, we caught the top. And this is on the 1 minute time frame, so very high leverage. They put their stop losses or liquidations right above here, and then they got wrecked. And you think, oh man, it's not that much. Like it's only $20, $30 move. Well, you got to think, man, these scalpers, keep in mind, we're on the 1 minute time frame. Like this was a short squeeze. On the 1 minute time frame, it was a short squeeze. So on a 200x leverage on whatever amount of money, right? Like if they're putting $1,000 on the trade with a 200x leverage, that's $200,000. Like it's not a small amount of money. So yeah, very, very important to practice good risk management and not necessarily to be trading like in open water, right? In the ocean, as I like to say. You really got to be careful of that. CJ, if you just you can just type in the general chat and I can see that. Also, thank you for sharing the calculate trade thing, this thingy here. Yeah, I'll give you. So let's use an example. Let's do an example on a $20. If I'm doing $20, okay. So there's two things. There's two ways that you can go about it. Let's come on the 5 minute. So using our example from the whole stream, if you have $100 in your account and you're so in your mind, whatever trade you're taking, right? Whatever justification you have for it, you're putting a $20 stop loss. So if you're entering on the 1 hour, then your stop loss goes under this low. If you're entering on the 5 minute, then your stop loss goes under this low. Now, I'm not doing TA right now, so obviously you want to look for levels and such and like, have confluence, like have it be justified. And if you don't know what I'm talking about or how to do that, go back and watch the other videos on YouTube because I teach you that. But let's just say your stop loss was going to go here, right? And right now, we'll use right now as the example. So your amount that you're allowed to lose is $20, right? So price is moving up. We have a 0.85% move down, right? What you can do is you can change your amount. So in your future settings, and I think all exchanges has this, but you can click where it says quantity. Like you can click here, whether you want it to be in BTC or USDT, and you can hit confirm. But this will change how much of position, like how much of a position you're putting on the trade, like how it's displayed. Now, unfortunately on MEXC, it doesn't actually give you the margin amount, right? So margin is different than position size. Margin would be your $20, but your position size would be 20x whatever your leverage is. So what I would do in this case is you can see your margin down here, right? So I would just keep adding zeros until I'm at 20, right? But keep in mind, I know that this is my stop loss, right? My stop loss is right here. Let's just say, give or take. So I cannot use, I cannot use 100x leverage because I'm at risk of getting liquidated, right? Liquidation on 100x leverage will be around 80% down. So I'll probably use something like 80x leverage. Where's my leverage right now? Yeah, I'll probably use like 80x leverage. Right? I'll have my contracts. You can press here, long with take profit and stop loss. We have our very clear stop loss here, which is 26590. We write 26590, and it tells you how much USDT you will lose. Now I can add to my position because this is my stop loss. So let's add until we see $20. Let's go like that. Okay, give or take, right? And then you open your position. That's it. Now again, ideally, you want to have this planned out beforehand, right? You don't want to just YOLO it like I just did. But if you ever have to do it on the fly, that's how I do it. Now there is that calculator. I don't know how it works, and I've never actually used it. So perhaps I'll get someone else to show the group this later in the Discord. But that's how I do it. Very simple. You just look at the bottom, right? And it could look a little bit different for your exchanges, but that's how you do it. Yeah, I'll show you my settings for Traders Reality after the stream. All right. Anyone have any questions? Now there's an equation that that Carrot Top uses. If you guys are reading the chat, there's a math thing. He like takes your amount of risk and divides it by your position size or something. I don't know what his equation is because I go based on units. His way is based on percentages. I go based on unit sizes. But it makes it very easy and very practical, like you guys just saw, And let's just say price was down here, right? And so you can do this with your limit orders as well. Let's say right now, let's just say I wanted to get in here and my stop loss was going to be right here. Like, let's really kind of exaggerate it, right? So if my entry is 26373, 26373, and again, with limits, it's way easier because you can plan this like way ahead. You put your stop loss, which is 26304, 26304. So how much of a percent down is that? So that is a 0.25% down, very small, right? I can 100x leverage this, no problem. I could 200x leverage this. So now it depends on how much, you know, let's see, let's go 140, right? 140x. And then you take your slider. Oh, wait, I have this is like a $50,000 account. So it's not super practical. Let's lower it. Remember, you're going by unit sizes, so this slider sucks. Now, all of a sudden, no, that's too much. Let's go 9,000. Okay, give or take. So now, all of a sudden, so keep in mind, the position that we have now, we put, man, I hate MEXC, bro. I actually hate MEXC. I don't remember how much we put, 2,000 or something. Now we can put 8,000 on with still only losing 20%. You see that? Or $20, right? So trading based on unit sizes makes it a lot easier. And obviously, as you grow your account consistently over time, you'll be able to like increase what you would consider in your unit sizes. So, you know, $100, like we said, is not super large amount of money. It doesn't make sense for me anyway to trade with $1. So I would, in this case, I would use a unit size of 20. And then when I'm at 200, maybe I will use a unit size of maybe still 20. And then at 300, maybe 30, 400, maybe 40. That's kind of the way that I do it, or that I would do it, right? I do position sizes instead of percentages. And that will be very helpful for when you're calculating how much you want to lose. And again, if you lose the trade and you're upset, then you're over leveraged, right? You need to have a clear reason, a clear stop loss, a clear invalidation. And now if all of a sudden I do this and I blew my whole account, then yeah, you should be upset, but don't be mad that you lost. Be mad that you were dumb. I have a request. We lose money majorly because we are not good at TA. This toss up. We want to learn TA with you. If you can make daily short video. Yeah, so the videos on YouTube are going to be more consistent, and we're actually going to be toning down the amount of live streams. If you guys have noticed, I only did one this week. But yeah, the YouTube videos will be consistent. But guys, like I said in the beginning, like I believe in providing value up front. So the videos are not going to stop. We're going to definitely keep doing it. All right. Last thing I want to talk to you guys about before I let you go, this has been kind of a lengthy stream, is another psychological thing, and especially in terms of like taking profits, right? So let's just say you, for whatever reason, did not practice good risk management. And keep in mind, we're like scalping, so this is very high leverage. If you're swing trading, it's the same concept, but you wouldn't be getting in at the exact bottom. And so like you wouldn't be using like, you know, such high leverage. You'd be maybe using like 30x or 50x or whatever. Now, the last concept I want to talk to you guys about isn't really anything on the charts. It's nothing like, you know, that you can show. But it's a very simple concept of when you're up a certain amount. So this is what I do, okay? If we're using the same example. So let's just say your $20 position runs up and you're up 500%, okay? So now you're up $100. If the amount that you're up would scare you if you were down, then take profits if you haven't already. Okay, I'm going to say that again. I want that to like stick in your head. If like, you know, again, everyone has different position sizes, whatever. If you're down $100 and it would freak you out, or sorry, if you're up $100 and it would freak you out if you were down 100, then take profits. Take at least half. If that's the case, take at least half. right? We want to do that. We want to take at least half. If you're up and we're using position sizes, so if you're up $40, right? You're in a $20 trade and you're up $40. I don't want you to think, oh man, let it keep running. Think of it in terms of trades. You're not up $40, you're up 2 trades. So if you take profits, if you take half out, now you just earned a free trade. And then let the rest run. Cool, whatever. But this is how you have to think, and this is how you will be consistent over time. So just because you make that $40, don't think, oh, now I can put 40 on the next trade. No. If you want to put more money on the trade, like, you better get really good at TA and get better entries, because we know better entries can lead for higher leverage. And that's how you get better position sizes. I told you guys before, like, learn the game, you know? If you're chasing the money, you're not going to win. So that's something that I very much recommend and I advocate for. If at any point you're bragging to your friends or whatever, like, oh man, look at this position. In terms of money now, we're not talking percentages. In terms of dollar amount, you better damn take profits. If you're up a certain amount that would scare you if you were down, you better take profits. Just a little cherry on top for you guys. Any last questions before we wrap up? I know today was a lot of talking. I know we started out kind of slow and it was a little bit unstructured, and I apologize for that. But risk management is not so linear, you know?
I just want to say you had a good stream, bro.
Thank you, man. I appreciate it. I'm also like super well, not super, but a little bit hungover. So, you know, I did my best today. All right. Anyone else?
I actually have like one thing to ask, Gio.
Yeah.
But it is not related to risk management. It is related to like the market cipher. Can I ask it?
Let me close up. Let me say goodbye to YouTube, and then you can stick around and we'll talk about that.
Sure, that'd be great.
Yeah. Anyone else have any questions? All right. This was a long stream. If you didn't understand it, go back and watch it again. And I will be making a risk management video on YouTube that's way shorter and way more structured, maybe 10 minutes or 20 minutes or whatever. So if you don't have time to watch the whole, to go back and watch the whole thing, I understand, but I will be consistently making videos. If no one else has any questions, guys, I'm gonna end the stream here. YouTube people, we have a great community on Discord, and this is where we're hosting our live stream. So make sure you head over to our Discord. The link is in the description down below. And we're talking all day. We're sharing our charts. We're, giving our insights on TA. It's not a signals group whatsoever. I don't believe in that. And it's completely free. So, make sure you check out the Discord, where I have over 130 people now. Crazy how big we've gotten in just 1 month. But yeah, make sure you join the Discord if you haven't already. And hit the like. If you made it this far to the video, I appreciate you. You're helping my watch time. And that's it. I'll see you guys in the next video. Later. Practice good risk management. Don't blow your account. You can lose your money, double the fast, double the speed. Then you can earn it back. Don't be stupid. Okay, bye.